Welcome to Technical Tuesday. This is Fed Razak, Senior Trading Strategist here at CMTrading. Do you know, as of today, December 10, 2024, I can name a list of major assets that are either making all-time record highs or yearly highs or all-time record lows. And the question is, how do you trade these type of markets? That's what we're going to discuss in today's video. So make sure to smash that like button, share, and do subscribe, especially if you find value in this presentation, all right? So what is making new all-time record highs? So if we look at the US stock market, we're looking at Apple, computer company. The Apple stock is making all-time record highs. Not just that, but Netflix, Amazon, Goldman Sachs, JP Morgan, and the list just goes on. And if we look at some of the other markets like the Forex symbols, we see the Canadian dollar making new yearly lows versus the US dollar. And if we shift over to the Turkish lira, also making all-time record lows versus the US dollar as well. So the question is, how do you trade them? Because it's a very lucrative market to trade, but it doesn't go without its downside, right? Every upside has its downside. And so you've got to be somewhat protective in these type of markets, all right? So these are some important points if you do decide to trade these type of environments, because yes, they are lucrative, and yes, they do give you some tremendous potential for making profits, all right? So number one, you don't want to chase something. You don't wait until it comes towards you. You don't want to chase it up, or you don't want to chase it down. You want to just, kind of wait it out and wait for that pullback. And yes, there are times that it's not going to give you that pullback. And it's very important not to chase, because it's altogether a very bad habit that if you do create, you'll bring it into other areas of trading that are just not even there, okay? So even if you're right in a chase, I'd say don't do it. Number two, it can still go higher or lower. Everybody thinks that they're gonna buy that bottom, or they're gonna short that top of the market. They're gonna get that sweet spot. And sure enough, it either goes lower or it goes much higher. And lower, yes, it could go to zero, but many a times, and I've seen this in many markets, and especially in the 2008-2009 credit crunch crisis and the crash that we had then. I mean, housing prices were going so low, and then you said to yourself, well, if it does dip below its intrinsic value, then that is a buy. But otherwise, it could still go much lower. Number three, wait for those pullbacks. Don't chase. That's part of not chasing. You want to wait for it to come back to you to jump in, because at least then you have a higher probability. If it does go higher, number one, you haven't chased it that it needs to go, let's say, another 3 points. Here, you bought it a little bit lower, so you have somewhat of 5 points to make instead of making those 3 points. This is super important because it does come up a lot. Stop losses are that much more important in these type of markets, right? Because you don't want to be caught yourself, even in a pullback. You don't want to be caught yourself if it does get that fade opportunity, if it does get that V formation, right? Many times something goes up so high and it spikes and makes a correctional move on the other side. So even if it does pull back, you want to make sure that your stop losses are that much tighter. And number five, you want to book your profits much faster. In a market that's trending higher, you could always get back in it, right? It doesn't mean that if you bought something and it went higher and you sold it, doesn't mean you can't go back in it at the next pullback, right? That's always an opportunity that's going to present itself. But in this type of environment, like I said before, you want to be offensive, you want to be part of it, but you also want to protect yourself and protect your gains. That's it for Technical Tuesdays. We'll see you here next week.